Hello and welcome to this video. In this video, we are going to do a A-level accounting question from paper 3, May-June 2023, variant 32, question 1. The question states that NT Sports Club runs a gym and operates a cafe. The treasurer provided the following list of balances of some accounts on 31st December 2022 and 31st December 2021. Club equipment at cost is $150,000 and the carrying value for 31st December 2022 is unknown, whereas for 31st December 2021 is $76,000. Cafe equipment at cost is $64,000 and the carrying value again for 31st December 2022 is unknown and for 31st December 2021 is $22,000. Cafe wages in arrears are $3,250 and $2,730. Heating and lighting in advance is $900 and $1,900. Subscription owing is $3,400 and $2,000. Subscription prepaid is $1,400 and $1,200. Cafe payables are $14,800 and $16,600. Cafe inventory at cost is $6,400 and $5,900. Net total for 31st December 2022 is still unknown. We have to find this, and for 31st December 2021 is $87,270. The treasurer also prepared a summary of bank account for the year ended 31st December 2022. Balance brought down for the bank is $76,800. Annual subscription is $68,000. Life membership fees is $24,000. Sales of club equipment is $2,000 and cafe takings are $55,000. On the credit side, we have rent, which is $18,000. Club administrative expenses of $40,150, lighting and heating of $7,500, purchase of club equipment of $13,000, purchase of cafe equipment of $8,800, payment for cafe suppliers as $31,600, balance carried down is $106,750, and the total on both the side is $225,800. The following information is also available. All the cafe sales are made on cash basis. Cash received from cafe is banked. Wages of $14,400 were paid out of the cafe's taking before they were banked. The cafe inventory at 31st December 2022 included items with a cost of $2,200 and a net realizable value of $300. Furthermore, life membership was introduced on 1st January 2020. Each life member has to pay $2,000 on the date of admission. The life membership fees is to be transferred to income over 10 years in equal amounts. The number of new life members admitted each year is as follows. Year 2020, new members are 6. Year 2021, new members are 10. Year 2022, new members are 12. Next, we have rent and also heating and lightings are apportioned 40% to the cafe and 60% to the club. Club equipment with a carrying value of $4,800 was sold for $2,000. Both the club equipment and the cafe equipment are to be depreciated at 20% per annum using reducing balance method. A full year's depreciation is provided in the year of acquisition and none in the year of disposal. In the abit of the question, we are asked to prepare a statement to show the profit or the loss for the year ended 31st December 2022 for the cafe. So we'll start with the working notes. The first additional information which was given was all the cafe sales are made on cash basis. Cash received from cafe is banked. Wages of $14,400 were paid out of the cafe's taking before they were banked. So for this, we'll start with the bank summary. And in the bank summary, we have on the debit side the receipts and on the credit side we have the payments. And the cafe takings, which is our sales revenue, and almost all of them were banked. So From the bank summary, we get the cafe takings, which was $55,000. So this is the revenue which they have earned from the cafe. Furthermore, it was also mentioned that the wages of 14,400 were paid out of the cafe's taking before they were banked. So this is also the part of our sales revenue. So we'll add 14,400 as well to $55,000. We will get the sales revenue as $69,400. You see, next what we are going to do is we are going to calculate the wages and the expenses. When we calculate for the profit or loss, we calculate it on the basis of matching concept, which states that all the expenses which belongs to the period for which we are making the profit or loss should be considered or should be matched with the revenue when we calculate the profit or loss, whether they are paid, incurred or prepaid. So when we do this, usually we take into consideration the accruals and prepayments. Most of the time I have found that the students get confused when they deal with this kind of adjustments. So what we can do is we can do it by using this timeline as well, where we are going to take the timeline for the previous year or the last year, the current year, for which we are going to make the profit and loss account, which is for 1st of January 2022 to 31st of December 2022. This will be our current year and what will be carried forward to the next year. If we see the wages which we have paid, which is mentioned here, is it is $14,400. Furthermore, the information was given that the previous year, that is on 31st/12/2021, there was an outstanding or arrears in the payment of wages, which was $2,730. So this was outstanding or arrears or which was not paid for the previous year. So hence on the last date of the previous year, that is 31st/12/2021, this was outstanding, and as this belongs to the previous year and it do not belong to our current year, hence this have to be subtracted, and hence we have subtracted it here. And then when we see the current year, that is from 1st of January 2022 to 31st of December 2022, at the end of this year, that is on 31st/12/2022, there was again arrears in the wages, and this is outstanding wages that is not paid, and this belongs to the current year, that is the year for which we are making the profit or loss account. Hence this have to be added. So now our adjustment for wages will be, wages is equals to the amount which we have paid, $14,400, and from there we subtract that outstanding which was for the previous period and add the outstanding which is for the present period. However, we have not paid it yet, but as it belongs to the current year, it has to be added, and we will get the total wages expenses for our profit or loss for year ended 31st December 2022 as $14,920. Next, the information given is the cafe inventory at 31st December 2022 included items with a cost of $2,200 and a net realizable value of $300. You see, when we calculated the closing inventory, we have considered this price, that is $2,200, for the items which were included in the closing inventory. But maybe because of some damage, or maybe the goods became obsolete, or because of deflation, the value is now reduced to $300. So based on realization concept, we are going to take the value which is lower, that is here the value lower is 300, and this was what we have considered when we calculated the closing inventory, that is we have considered the value as $2,200. So whenever there is a loss, based on prudence, we have to record it. So we take the closing inventory which was given as $6,400, and we will subtract this value which we have taken when we have calculated the closing inventory as $2,200, and now the present value which we know is $300, so that will be added. So now our closing inventory will be $4,500. Next, let's calculate the purchases. Purchases can be cash purchases or the credit purchases. No information for the cash purchases is given. However, for the credit purchases in the bank summary, it was mentioned that the payment was made to the suppliers. This will be for the credit purchases and the amount mentioned was $31,600. Furthermore, the information was given that there was cafe payables, that is your trade payables. That is, you have to pay to the supplier from whom you have purchased the goods on credit. And the information was that on 31st December 2021, the cafe payables was $16,600. That is, this amount was the amount which have to be paid to your trade creditors. However, this expense is for the previous year period, that is, you have purchased this good for the last year. So this amount have to be subtracted, which we have done here. And other information which was given was that at the end of the year 31st December 12/22, for which we are making the statement for profit or loss, during this period the cafe payable was $14,800 at the end of the year. That is, this was the purchases which was made for the current year, for which we are making the statement for profit or loss. So this have to be added. So we'll take $31,600 plus $14,800 and we subtract $16,600, which cost this was for the previous period. Now we'll get the purchases as $29,800. Next, we have information about rent and heating and lighting are apportioned 40% to cafe and 60% to club. Furthermore, in the bank summary, it was given that heating and lighting payment was $7,500. Moreover, it was also mentioned that there is advance payment of heating and lighting, that is prepayment for heating and lighting. At the end of the previous year, which was 31st December 2021, there was a prepayment or heating and lighting expense was paid in advance, and this prepayment will be for the next year, that is our current year. And as this is an expense for our current year, hence we are going to add this. And next, it was also given that there is a prepayment or heating and lighting was paid in advance at the end of the current year, that is on 31st December 2022 there was a prepayment, and this prepayment will be for the next year, hence we will subtract it. So for heating and lighting it will be $7,500 plus $1,900 minus $900, and the total will be $8,500. Now, out of this $8,500 for heating and lighting, 40% will be apportioned to the cafe. So, $8,500 times 40% will be $3,400, and 60% will be given to the club. So, it will be 8,500 times 60%, which will be 5,100 will be the heating and lighting expense for the club. And for rent, it was mentioned in the bank summary, that is, the rent which was paid was $18,000, and again out of this 40% will be for cafe, which will be $7,200, and the rent for the club will be $18,000 times 60%, which will be $10,800. In the next adjustment, we have cafe equipments are to be depreciated at 20% per annum using reducing balance method. That is, we are going to take the net book value or the carrying value for reducing balance method. A full year's depreciation is provided in the year of acquisition and none in the year of disposal. So cafe equipment carrying value on 31st December 2021, which will be the net book value, was given as $22,000, and we are taking this because we are finding the depreciation on the basis of reducing balance method. Furthermore, it was also mentioned in the bank summary that the purchase of cafe equipment have a value of $8,800, and as we have to provide a full year depreciation in the year of acquisition, hence we are adding this up, and this will be $30,800. So on this, if we take the depreciation of 20%, it will be $6,160, and then after subtracting this, the carrying value at the year end, that is 31st December 2022, will be $24,640. Now, as we are done with all the calculation, let's make the statement of profit or loss for the cafe for the year ended 31st December 2022. We'll start with the revenue, which we have calculated in the first working notes as $69,400. and then the opening inventory which was given as $5,900, the purchases which we calculated in the second working notes as $29,800, closing inventory, again we have calculated this in the second working notes as $4,500. So we take the opening inventory, to this we add the purchases, we subtract the closing inventory, we get the cost of sales as $31,200, which will be subtracted from the revenue to get the gross profit of $38,200. Then the other cafe related expenses which we have is wages, which we have calculated in the first working notes as $14,920. Rent, which we have calculated in the third working notes as $7,200. Heating and lighting, again we have calculated this in the third working notes as $3,400. Depreciation of cafe equipment, which was calculated in the fourth working notes as $6,160. When we total all the expenses, it will be $31,680, which will be subtracted from $38,200, and we will get the profit for the year for the cafe as $6,520. In the B bit of the question, we are asked to prepare the club's income and expenditure account for the year ended 31st December 2022. So let's begin with the working notes. Now let's do the calculation in the working notes. You see the various incomes which the club receive may be the income which they have received from the cafe, which we have calculated in the A bit of the question. Then the membership fees, which is called as subscription. This can be a monthly subscription or a quarterly subscription or a yearly subscription. Like say if you are a member of a health and fitness club, then you pay the subscription as the membership fees, and this can be a lifetime subscription, or even some clubs take up events so that they can earn more income, or they can also get donations in the form of income. So we'll start with the subscription. For subscription, the information which is mostly given is a subscription which is paid, and this will be mentioned in the bank summary. And then we will have subscription which is owing or in arrears or outstanding subscription, and this information will be given for 2 years. And apart from that, we may also have prepaid subscription, and again this information will be given for 2 years. So we can make a statement to calculate the subscription for the given period, or we can make the subscription account. So here I'm going to show you both the methods, because some question asks to make us the subscription account, so we should be aware about both the methods. Now let's see the information which is given. In the bank summary, it was mentioned that the subscription which was paid in bank was $68,000. Then furthermore, it was mentioned that the subscription which is owing, that is which is due, and this is given for 31st December 2021, and the amount which was given was $2,000. So let's see on our timeline. This amount is due at the end of the previous year, that is on 31st December 2021, and as this amount, that is $2,000, belongs to the previous year, hence we are going to subtract it. And then at the end of our current year, that is on 31st December 2022, this amount, that is $3,400, is owing or outstanding, and this is the subscription which is due for the period for which we are making the income and expenditure account, hence we are going to add this up. Then we have prepaid subscription, that is the subscription which was paid in advance. If we see on the 31st December 2021, which was the last day of our previous year, this amount, that is $1,200, was prepaid, and this was prepared for which year? That is, this amount will be prepared for the next period, that is the current year for which we are making the income and expenditure account, hence we are going to add this up. Next we have the prepaid subscription at the end of the current year, that is on 31st December 2022, and this is prepared for the next year. As this is not the subscription for our current year, hence we are going to subtract $1,400. So we'll take $68,000, and then we subtract $2,000. We are going to add $3,400, $1,200, and then we are going to subtract $1,400, and we'll get the subscription which we transfer to the income and expenditure account for the year ended 31st December 2022 as $69,200. Now let's do the same working in the subscription account. You see, subscription account is a nominal account and this deals with the expenses and the incomes. Here subscription is income. So whatever income is there for the current year should be credited and whatever do not belong to this year should be debited. So we'll start with the bank, and in the bank summary we have subscription on the debit side because we have received this amount in our bank. Now here it will be on credit side, that is bank, and the value is $68,000. So this will complete the double entry for this transaction. Then we have the balance, that is we have prepaid the subscription at the end of the previous year and this is brought down in the current year, and as this is a subscription for our current year, hence we are going to write it on the credit side. Furthermore, we have the subscription which is owing. We have not yet received the subscription. However, this outstanding subscription or the owing subscription belongs to the current period. Hence, we will have balance carried down, that is we are going to receive this amount in the next year, but this is a subscription which is due for our current year. Hence, we are going to credit it and we will mention $3,400. Now the subscription where we have subtracted this in our statement, that is the subscription which do not belong to the current period, we are going to write it on the debit side. That is the balance owing, that is the subscription which was owing for the previous period, and this was which was owing on the last day of the previous year, that is 31st December 2021. So we will bring it down this year, and as this is for the previous period, not for our current period, hence we are going to write it on the debit side so that we can subtract it from the credit side. So this is $2,000 which we debited. Then the prepaid subscription which is at the end of the current year, that is 31st December 2022. This is prepaid for the next year and this is not the subscription for our current year. Hence, to subtract it from the credit, what we are going to do it, we are going to debit it and mention balance carried down, that is this was the balance for the next year and hence we will write 1,400 on the debit side. Now the balancing figure, that is after adding this side, that is $68,000 plus $1,200 plus $3,400 will get $72,600. From there we subtract $2,000 and $1,400. The balancing figure will be $69,200 and this will be transferred to the income and expenditure account. Here it is debited, there it will be credited as our income, and then we total both the side of the subscription account. Next we have life membership was introduced on 1st January 2020. Each life member has to pay $2,000 on the date of admission. The life membership fees is to be transferred to income over 10 years in equal amount. So we have to make the income and expenditure account for the year 2022. And here it is mentioned that the life membership was introduced on 1st January 2020. So let's calculate the total number of new life members which were added till the year 2022. In the year 2020, the new life members were 6. In the year 2021, it was given that the new life members were 10. And in the year 2022, the new life members were 12. So the total is 28. And each life member will pay $2,000. So the total life membership will be 28 times 2,000, which will be $56,000, which will be the total life membership which was paid till 2022. And this have to be transferred to income and expenditure over a period of 10 years. That is, we have to divide this by 10. So 56,000 divided by 10, we get $5,600, and this will be the life membership fees which will be transferred to income and expenditure account in the year 2022. Next we have club equipment with the carrying value of $4,800 was sold for $2,000. Carrying value means the net book value, and the net book value for the club equipment was $4,800. However, it was sold only for $2,000. So the difference between this, that is 4,800 minus 2,000, the value is $2,800, will be the loss on the sale of equipment. Lastly, we have club equipment are to be depreciated at 20% per annum using the reducing balance method. A full year's depreciation is provided in the year of acquisition and none in the year of disposal. So we have to provide depreciation based on the reducing balance method, and for this we will take the carrying value, and it was given the club equipment carrying value on 31st December 2021 was $76,000. Then in the bank summary it was mentioned that we have purchased club equipment worth of $13,000. We have to provide a full year's depreciation when we acquire the equipment, hence we will add this total amount. So it will be 76,000 plus 13,000 and it will be $89,000. Furthermore, there should not be any depreciation provided in the year of disposal or in the year of sale. So we have sold here the club equipment worth of 4,800, and as this is reducing balance method, we are going to take the carrying value, and for this we should not provide any depreciation, hence we will subtract this, that is 4,800 will be subtracted from $89,000. We will get the value as $84,200, and 20% on this will be the depreciation and the value will be $16,840. And when we take this $84,200 and subtract $16,840, we will get the carrying value of the club equipment on 31st December 2022 as $67,360. Now let's make the income and expenditure account for the year ended 31st December 2022. We have subscription which was calculated in the fourth working notes as $69,200. Life membership fees which was calculated in the fifth working notes as $5,600. Profit from the cafe which was calculated in the bit A of the question as $6,520. So when we add all the incomes, it is $81,320. Then we have expenditures which is rent which was calculated in the third working notes as $10,800. Heating and lighting which was calculated in the third working notes as $5,100. Club administrative expenses which was given as $40,150. Then we have loss on sales of club equipment which was calculated in the sixth working notes as $2,800. Depreciation of club equipment which was calculated in the seventh working notes as $16,840. When we add up all the expenditures, it is $75,690. So from the income, that is $81,320, we subtract the expenditure which is $75,690. We get the surplus for the year as $5,630. In the C bit of the question, we are asked to prepare a statement showing the movement in the accumulated fund for the year ended 2022. So, if you have to show the movement of accumulated fund, we need to show the closing accumulated fund and the opening accumulated fund and how they have changed. So, we have a formula, the closing accumulated fund is equals to opening accumulated fund plus the surplus for the year. And we don't know the opening accumulated fund, so first we will calculate the opening accumulated fund and then we will show this change, that is how the opening accumulated fund, to this we have added the surplus and we got the closing accumulated fund to show the movement of accumulated fund in the year 2022. So let's start with the calculation of opening accumulated fund. What is accumulated fund? Accumulated fund is the other name which is given to capital for the clubs and society. We know the accounting formula, that is assets equal to capital plus liability, or capital is equal to asset minus liability. So we are going to use the same to find the opening accumulated fund, where we are going to find the opening accumulated fund will be equal to the total assets, and from there we subtract the liabilities. So for the opening accumulated fund, we'll take the net total, which were the total of assets and liabilities, and we'll take the one which was for the year ended 31st December 2021, because this will be the opening balance on 1st January 2022. So the net total book value of given balances were $87,270. Furthermore, bank is also our asset which was not added in this balances. So we are going to add that up. And which bank balance we are going to take? We are going to take the opening balance because we are finding the opening accumulated fund. So in the bank summary, the opening bank balance which was given was 76,800 should also be added. Then in the adjustment, we have life membership fees, and this will be transferred over a period of 10 years. So whatever is transferred to the income and expenditure account, the remaining will be the prepaid, and as prepaid is the liability, hence we have to subtract that. So we'll see for the year 2020 we have 6 new life members and they have paid a fees of $2,000. So 6 times 2,000 will be $12,000, and till the 1st Jan 2022 we have already transferred the life membership fees for 2 years, that is for 2020 and 2021. So the remaining 8 years are pending and this will be the liability. So 8 by 10 plus the one which we got it in 2021, the life membership fees which we have for 2021 has to be calculated. So the life members in 2021 were 10 and they paid a fees of $2,000, and we have already transferred 1 year life membership fees, that is for 2021, and we are finding the accumulated fund for 1st January 2022. So now we have remaining 9 years, so it will be 9 by 10. So once we calculate this, we get the liability as $27,600 for the life membership fees, and as this is a liability, we subtract it. So after adding and subtracting, we get the accumulated fund at 1st January 2022 as $136,470. Now we'll prepare the statement showing the flow of the accumulated fund. For this, we will start with the opening accumulated fund, that is the accumulated fund at 1st January 2022, which we have calculated in our working notes, and we got it as $136,470. To this, we add the surplus for the year, which we calculated in the bit B of the question as $5,630. So when we add this, we get the accumulated fund at 31st December 2022 as $142,100. Furthermore, additional information is provided. The management committee would like to buy the club's own premises, but additional finances is required to carry out this plan. They are considering 2 options. Option 1, applying for a long-term loan from a bank. Option 2, obtaining a personal loan from a wealthy member. In the debate of the question, we are asked to advise the management committee which option they should choose, and we have to justify our answer. There are various pros and cons for both the option, that is whether it's a bank loan or a personal loan. You see, bank loan have to be backed up with security. We have to mortgage some asset to get the bank loan, whereas personal loan do not require this, as we back up the bank loan with security. Hence these are more secure loans, hence we get it at a lower interest, whereas personal loans are more risky loans, hence we get it at a higher interest. Furthermore, bank loan will take a longer period of time to be given because this requires some paperwork, whereas personal loan require very little formalities, hence we can get it immediately. And bank loan will have a fixed period of time for repayment. Say we can repay it in a period of 2 years or 5 years, whereas personal loan can be recalled at any time. Hence, what I suggest the management is they go for a bank loan because they have more benefits when compared to the personal loans. With this, we have completed this question. Thanks for watching my videos. Have a peaceful and blessed life.